Welcome back, everyone. What a great conference we've had so far. Let's welcome our next presenter. We have VOX Royalty Corp, trades on the NASDAQ under the symbol VOXR and on the TSXV under the symbol VOX. Established in 2014 and has since built unique intellectual property and technically focused transactional team and a global sourcing network, which has allowed VOX to target the highest returns on royalty acquisitions in the mining royalty sector. Today, we'll be speaking with CEO Kyle Floyd. Kyle, it's so great to have you back with us presenting to our audience. VOX was an interesting story for our audience to learn about, as you have an exciting form of commodity exposure without being exposed to inflationary pressures. Wow, congratulations on that. That's certainly unique. And plus, should also note that since you were last with us in August, VOX has been pretty hot. I noted that you've recorded another quarter of record revenue, announced an inaugural dividend, and commenced trading on the NASDAQ. Great milestones, and we are so excited to have you back and talk all about it. So Kyle, how are you doing today?
Anna, fantastic and great to be with you again. Yes, it's been a very active just couple of months since we were last on the program with you. It's exciting. We commenced trading on NASDAQ. We announced another record quarter of revenue growth. And what you're seeing is a business that has really the tailwinds behind it. The macroeconomic climate that we find ourselves in is very difficult. That being said, the inflationary pressures, we don't feel. We're actually seeing significant margin expansion. And I should note for all the investors out there, the interesting thing about this current market dynamic is that in the last 9 inflationary regimes, commodities have been one of the best performing asset classes coming out of those types of scenarios. And so VOX is really well positioned, Anna. Excited to dig into it and tell the viewers more.
Awesome, Kyle. The floor is yours. Take it away.
Well, again, thanks everyone for tuning in. I'll really quickly point you to the forward-looking statement disclaimers. One of the other notes that I should mention is just about a month ago, we also announced our inaugural dividend. That was really a nice catalyst for our business. We always believed in returning the capital that we're generating to shareholders. You see that already puts us at one of the highest dividend payout ratios in the sector. That being said, we're still keeping a significant amount of capital back to continue reinvesting in accretive royalty transactions. So expect more growth from VOX, but excited to also demonstrate that return on invested capital is coming back to our shareholders and something that has been a big milestone and catalyst for us. For those of you out there that don't know about the royalty sector, it's been one of the hidden gems and what I would call the investment hack in the commodity sector. Royalty companies have far outperformed any commodity-based benchmark that you can compare it to. So for those investors looking for commodity exposure and looking to get pointed to what has really performed well over the last 2 decades, royalty companies have by far and away exceeded all the commodity benchmarks, whether that's the physical, the mining companies, the indexes. Royalty companies have done far better. That's also including the NASDAQ and the S&P 500. And there's some really key reasons for that. One, the nature of the royalty really harvests asymmetric upside and less downside than owning a mining company directly. What we're able to deliver is we're able to deliver all the upside of potential resource growth, reserve conversions, increase in production, all compounded by any positive movement in metal price, yet less risk because our business model is actually pricing in backwardation where metal prices decrease. So we're finding very high margin assets that have exceptional, if not explosive upside when you see resource and reserve increases and production increases. And then again, all of that compounded by potential metal price increases. And the key to understand about a royalty company is we're very unique. We don't fund mining companies. We are not an operator. We are not on the hook for any of the operating costs to run these operations. And we actually never finance mining companies either. We're buying these royalties from third-party hands. So for those of you familiar with the oil and gas space, the landowners, the ranchers, the groups that hold these royalties that are not affiliated with the mining company, that's who we look to go buy mining royalties from. And we've been the fastest growing company in that respect over the last few years. But the royalty also has some unique characteristics. As I noted, we're not on the hook for any of those costs. So we're not experiencing any of the inflationary pressures that the industry is experiencing and likewise consumers are experiencing. So that positions us very well to see the margin expansion that we're realizing. Also, from a risk perspective, it's a non-diluted interest. So when we take that top line percentage of revenue, it doesn't matter how much money the mining company goes out and eventually raises, debt or equity. The royalty essentially operates as a first lien and gets paid off of the revenue, and it's not diluted. So a lot of the risks of owning mining companies, cost increasing, it's very capital intensive. VOX is essentially a capital light business operating in what's one of the most capital-intensive industries on planet Earth. And we get the diversification of having multiple producing assets over multiple operating partners. And so it's a lot less risk with just as much upside. And the fact that it's not diluted and we get the benefit of all the expenditures from the mining companies without having to contribute that, as I mentioned, it's very asymmetric upside and far less downside. And so that is the reason why royalties are such an interesting asset. And when you're picking the best royalties, very explosive returns for shareholders. So this is one of the case studies that we've developed. These are not our assets. We do have some case studies that are building like this within our own portfolio. But the reality is royalties are so profound in their nature. When you pick the right assets to deliver value to shareholders, you see some of these returns on invested capital, 500x in some cases. This is one of the shining star royalties in the industry. You could say maybe the industry was even built around that Franco-Nevada holds. It was called Gold Strike. They put about $2 million to buy this royalty back in the late 80s, early 90s. That's produced over $1 billion of revenue for them, and it's expected to generate another $1 billion, probably more in revenue. And so those are the assets that we're looking for. We buy third-party royalties. We don't finance mining companies. We've built a business model around harvesting the best qualities of the best assets in the commodity sector, and we continue to grow better, faster, and with a competitive advantage that underlies and really compounds our ability to find great value in buying these assets. So I noted VOX targets royalties. We're a royalty company. We're not a mining company. We believe there's a lot of benefits in that business model, especially with the backdrop that we see from a macroeconomic perspective, providing really wind at our back. But the company has been purpose-built over the last 10 years to find value in this sector and to deliver accretive growth, really like no other company has done over the last 20 years. What we have to our advantage that others don't is we have the world's largest proprietary database of third-party royalties. This database gives us a roadmap to where interesting royalties over interesting assets can be found. It's not a static operation for us. Our team of mining engineers and geologists on the front lines of our business, one of the unique capabilities of our team is that technical capacity. So you, the investor, don't have to be the mining engineer and geologist or investing in the space for 3 cycles to understand both the risks of these assets and the upsides of these assets. We all know mining is a very esoteric industry. It can be very difficult to get your arms around, but we have a team on the front lines of our business that allows us to do that. More so than even that, they're able to see some of the developments across these assets and see where value can be found that many are missing. And so you combine that capacity with the ability to have a roadmap of where these royalties exist, many of which our competitors are blind to. It's giving us an advantage in sourcing really terrific royalties at great valuations that are compounding in value within the portfolio. And so that's what our business is built around. We find great royalties at great value on an accretive basis. And since 2019, we've been the fastest growing royalty company in the entire industry. Quick overview on our capital structure. We're about $110 million market cap based on where we're trading over the last couple of days. One of the things I would note is I founded this company almost 10 years ago to be a shareholder-focused business that was really targeting what we believed was the best assets in the commodity sector, staying disciplined around that for our investors, and building up the company its competitive advantages patiently. Our management team owns almost 15% of this business, and I'll tell you that's critical to the success of all of us as shareholders. We're very aligned in finding accretive and building accretive value and building long-term value for our shareholders. I think it's something that the industry struggles with is the age-old agency conflict, where management doesn't own a lot of the stock and the company that they're working for. I'll tell you, we look at this business and we fight for our shareholders and fight to create value every single day because we're big shareholders ourselves. So it's always a privilege to be on these forums and to be in touch with the investors that are tuning in today. We're working hard for you and we're building a very, very good business. Some of the highlights of our team, again, I've touched on it already. It's a very technically focused team. It's a team of mining engineers, geologists, and in some cases, some of our employees are both. The reality is it was a purpose-built team and engine to go find value in this sector. So in a space that can sometimes not have the right people with the right expertise operating the right jobs, VOX is the antithesis of that. We have more than $1.5 billion of royalty acquisitions under our belt. It's one of the more experienced teams when it comes to finding, procuring, and evaluating royalties. And you see that showcasing itself within the results that we're generating for our shareholders. You look at the growth that we've realized sequentially quarter over quarter over quarter. We indicated that would happen. That's because we have both the competitive advantage through the royalty database alongside a very good team that's very sophisticated and technically savvy in evaluating these assets. We have built the second largest holding of hard rock mining royalties in Australia. So why is that significant? It's significant because Australia, and especially Western Australia, is the best mining market in the world. It was just ranked #1 by the Fraser Institute. But really, from a practical perspective, there's nowhere else like Western Australia where you can both explore, develop, and bring an asset and continue an asset into production like Western Australia on the timeline that they can accomplish in that jurisdiction. It's amazing stability in terms of rule of law. It's amazing quality in terms of the operators of these mining projects. In Australia, the extractive industries are still such a meaningful part of their economy that you have more people and better people operating these operations in general. And that means better success rate of these assets and better productivity from these assets. That's overlaid with great infrastructure and world-class geology. Australia is the world's largest by far exporter of iron ore and also the world's largest exporter of gold. So the geology in Australia is world-class. We are targeting some of the best assets with the most upside and the lowest risk that we can find at great value. And we've had a huge competitive advantage in Australia, both with our intellectual property through the database, but also our team. Our team is made up of 3 Australians that are very, very sophisticated and capable of understanding the geology, understanding all of the uncertainties around mining projects, and also having very deep relationships with a lot of the royalty sellers. So we have a natural advantage in Australia that we are able to exploit. And that's allowed us to build one of the best royalty portfolios that exist today, especially in Australia, at very, very good value compared to any peers operating in the space. So a couple highlights. We have 7 producing assets now. 5 of those 7 are in Australia. Essentially, every one of our projects is an open pit, which has a lot less risk. And most are either undergoing expansion or projects that we think will undergo an expansion. And so we have a very, very robust portfolio that is helping drive the results that we're obviously creating fundamentally within the company. But it's our ability to find value in Australia, which we believe is one of the best stable and productive jurisdictions to have royalties in the world over. And so we're very excited about our portfolio as it stands today and what we're going to be able to continue to source and bring into the portfolio in the future. We're very focused on let's call it the long-term ESG characteristics of these assets. So we are targeting assets that we believe can be in production and successful companies for decades and decades to come. So that does factor into our process. We're looking at assets that are going to hit qualifications that investors might put on these assets 10 or 20 years from now. And you see some of that pedigree within these operating companies that are operating the royalty assets that we have. They're putting solar in place. They're managing their community relations very well. And so overall, very excited about our portfolio and its ability to continue to create value for our shareholders for what we believe is generations to come. I've noted the growth of the business. Yes, we've been the most active royalty company in terms of acquiring new royalties from third parties in the industry over the last 3 years. But it's not growth for the sake of growth. It's growth for all the right reasons. Highly accretive value is being created day in and day out by our team for our shareholders. We have created the most growth in both cash flow per share and NAV per share over the last couple of years. You see that growth reflected in this chart. We actually doubled our guidance last year from where it stood. We ended up delivering $4.6 million to the top line. We came out this year initially with around $6 million was guidance, close to doubling that to between 10 and 12 for this year. And then we've also increased the net asset value, the net present value of the assets that we hold in the portfolio, significantly so. We've only been public for 2.5 years, and we went public. We were trading at about $3 a share. We happen to be around that level today, yet we've delivered such exponential growth in both net asset value and cash flow per share. And that's not yet reflected in the stock price. I believe that's coming. We're going to continue generating these types of results. And we're excited about both what's already in the portfolio and new opportunities to come. What's driving the significant revenue growth? If you pull up a chart on our revenue growth, it's been robust over the last few quarters. We told investors this was coming, and that is being driven from the producing asset count. So putting VOX in context of other commodity type of investments, alternatives that you have, to have 7 producing assets generating revenue for the business very, very significant. That would compare to probably a $5 to $10 billion mining company on average, having that many producing assets. And so I noted that royalty companies, when they build their portfolios the right way, offer the business and its shareholders diversification of revenue streams. So 7 producing assets. What that means is that's driving revenue growth because 3 of those assets are currently expanding their production. So that's highly significant. Alongside new assets coming into production, we have cherry-picked and really targeted assets that will be in production anywhere from a quarter before we buy the royalty to maybe 3 to 4 years out. And so you're seeing this continual development within the portfolio of assets going from pre-production into production, and that's driving the revenue growth results that you're seeing in the company. We're very excited about this pipeline. This pipeline of opportunities essentially equates to about 80 to 90% of our net asset value is reflected in the royalties on this slide that take us from 7 producing assets to 21 producing assets and exponential revenue growth alongside of that. So we're excited about what we're offering for our investors. It's low risk growth, it's very quality assets, and it's the most robust growth in the industry, acquired at the most accretive values. Now, VOX has continued to perform. We've done what we said we were going to do to the market. We said there was potential for a dividend. We did that. We said we'd be trading on the NASDAQ. We've done that. We said we would have sequentially record revenue growth. We've delivered that. Yet the share price is truly not yet anywhere close to reflecting what we believe our fundamental value is. Our closest comps are actually on the left side of this chart. That would be Gold Royalty Corp and Metalla. We're doing far more revenue than those companies. Our growth rate is higher than those companies. And the development stage assets that we bring along with that and our over 100 million gold equivalent ounces covered under royalty is as significant or more significant than those businesses. And so we're excited about where we stand. We see a very logical path to our multiple trading at the higher end of these relative ranges. We're the only company that has the competitive advantage of the database. We've built a business model and a team purpose-built for finding value on a long-standing, systematic, repeatable basis, really like no other company in our industry. So we believe that it's logical, and we believe the fundamental value of this company will start to be reflected in the share price and in the relative multiple that we're realizing for our shareholders. So right now, I would say that while this is a frustration for us in terms of where we're trading, I see the wind has certainly shifted to our back, both from a macro environment and from a trading perspective and from an investor awareness perspective. That's really working nicely in line with our fundamentals. So I would believe that we continue to see ourselves move to the left of this chart, which means that the share price will be moving as well. We've performed okay over the last 12 months, and that's saying something in what has been obviously a protracted bear market. And I think the reason for that is the fundamental value and certainly the valuation gap between the fundamentals of the business and where we're currently trading. I believe that we're trading at a fraction of our true net asset value. And I believe ultimately our share price and our valuation will reflect the fundamental value in the business. We've been highly successful in delivering outsized performance for our shareholders over the last 12 months. The catalysts that we said were going to happen have happened. The value as a result of that has also been created, and I believe the share price will start to reflect that in tangent. So why VOX and why now? The macro environment is very, very successful for VOX. If you're looking for a business that has tailwinds and not headwinds, VOX is one of those businesses. The persistent inflation that we've realized over history has meant that commodities in that cycle do very, very well. We are a commodity-based business. Also, we are not exposed to the inflationary pressures. So while that creates an uplift cycle typically in commodities, we're not exposed to the rising cost pressures of mining companies. And in fact, most of our portfolio is exceedingly well capitalized, and they're growing their businesses. They're drilling more than ever. They're bringing their assets into production faster than we expected. And so what we're seeing consistently is portfolio achievement that went beyond expectations, and that's driving a tremendous amount of value for our investors. And so we're excited about what we have in front of us. We've delivered some of the most exceptional revenue growth in the industry. We have a deep pipeline of additional opportunities that we will continue to evaluate and bring into the portfolio when they're highly accretive. And we're tremendously excited about where the business is positioned. For the investors looking for a company that has a tremendous amount of momentum, both the fundamentals tracking with greater market awareness through the NASDAQ listing, and certainly greater liquidity that's picking up. We're excited about where VOX is. We're excited to continue developing this business for our shareholders. So, Anna, I will turn it over to you. That is the end of my prepared remarks.
Great presentation, Kyle. And again, congratulations on all of this success. Speaking of success, what do you attribute this all to? You've grown so much and so many great things are happening. So what's happening? Why do you think that's happening for you?
Look, we built this company very patiently. We had patient shareholders that, when I founded the business, I said, we can create a lot of value in the commodity sector if we do it the right way, underpinned by the profound kind of leverage that commodities can create for their investors when they're over the right assets. And so with a technical team at the front line, so that's mining engineers and geologists, handpicking royalties with the advantage of the database behind us, that's what's really allowing us to find the value that we have. And that's going to continue to grow. So our ability to find value over great assets and having that royalty database as a competitive advantage is what's driving the success and this growth.
And Kyle, you've detailed the near and medium term growth, which is exceptional. So what are some of the unforeseen upside scenarios that exist at VOX beyond what you've discussed in your presentation?
Well, look, within kind of our forecasts, we don't price in any rise in metal prices. So I noted kind of at the outset that these inflationary cycles have been very productive for commodity prices. So that's a natural kind of uplift environment for us if that happens. We don't plan on that. I think that could be likely. But also, some of the things that we don't touch on as much in the presentation is we have over 100 million gold equivalent ounces under royalty coverage. That's hugely significant, almost hard to find kind of a way to bring that into perspective for the viewers. But all that to be said, there's a tremendous amount of upside that we don't talk about. So for the investors looking for juniors because they could have this exponential upside, VOX presents that with just a lot less risk, a lot more consistent growth, and very robust near and medium term growth, along with that very long term upside. So I think we're unique in that respect, and that's certainly not priced in.
So let's talk a little bit about inflation. If it continues to persist, how does that affect VOX?
Well, again, inflationary cycles have been very productive for commodities. And while it's actually, in some cases hurting mining companies because it's compressing margins, our margins are expanding because we have rapidly increasing revenues. And because we take a top line percentage of revenue, not EBITDA, not net profit, we're not exposed to those inflationary pressures. So most investors don't have many places to turn to if they're looking for a company that doesn't have those inflationary cost pressures. VOX is one of them that doesn't have it. So even if inflation persists, it probably means at the end of the day, and there's a lot of reasons for this, that commodities will outperform. So we'll get the benefit of that without it eating away our margins. In fact, we have rapidly expanding margins in our business right now. So I would say, we're well positioned even if inflation persists.
Good. Mike Reynolds wants you to clarify. So resource drillers and miners, they lease land from landowners. The landowners are the royalty holders, and you buy royalties from them so they can take some risk off the table. Is that correct? And is that their motivation to sell you royalties?
That's a very articulate question and pretty well defined, I have to say. Yes, we're looking for these third parties that own royalties. We're buying royalties from those third parties exactly as that example lays out. And a lot of times sometimes it's asset diversification desires. So call it risk mitigation. But a lot of times it's also just liquidity. So these can be the nest eggs and really the retirement plans for a lot of these original landholders, prospectors, or entities that used to own the mining rights. A lot of times it's a liquidity event, and sometimes it's an asset diversification event. So yes, it's typically those two needs that help create the opportunity for VOX to buy that royalty.
Joan Lindsay wants to know, what commodities do you look for, and which commodities have the largest margins?
Great question. So we really, right now within the portfolio, gold would be probably the most net asset value that we're attached to. 4 of our 7 current producing assets are gold. And so the reality is it's gold right now. I wouldn't say that we're huge gold bugs. What we do is we look for hard rock mining royalties over great assets that we believe that asset or that the geology of that asset can expand significantly, resulting in resource and reserve increases and production increases. So right now we're precious metals heavy. That being said, what we're really focused on is finding great ore bodies with great royalties that create the types of results that we had in a case study earlier on in the presentation, because that's where we think the most value is found. So we're somewhat diversified. We're not exclusive to one metal. And we believe that also lowers the risk and also the discount to our future cash flows. So we think we're a unique business model in that we have a multitude of exposures over great assets.
Lucas Owens wants to know, how much upfront capital do you put out initially? And what's the percentage return you look for by the end of the project? Or are some of these projects perpetual?
So very good question. We don't publish, say, a hurdle rate per se, but what I can point you to is we've delivered the highest return on invested capital in the industry. So this year we'll do, call it 10 to 12 million top line on 50 million deployed into royalties. That's about a 20% current return on very long duration cash flow, where most of the industry is targeting 1 or 2% returns. Next year, analysts have us doing between 15 and 20 million. Again, those are analyst numbers. I'm qualifying that, but let's take the high end of the analyst range. If we do 20 million on 50 million invested into royalties, and that's what's in the portfolio now. That's not counting any future deals that we have. That's just the existing portfolio. That's about a 40% current return on invested capital. Again, the highest in the industry, and it demonstrates our capacity and our ability to go find great royalties on great ore bodies at great value. So great question, and that's how we evaluate the world.
Chris wants to know, how many of these royalty projects can you handle?
That's the beauty of a royalty company. It's a very, very scalable business. We have a team of 7 full-time professionals, 6 senior executives. And so we are able to continue scaling our business with very little increase to the team and G&A. And so I touched on our rapidly expanding margins. We're leading the industry in that respect. And so excited about the scalability of our business and the growth that's being realized without G&A tracking in line with that growth per se.
Bradley Potter wants to know the average life cycle of a royalty. How many years does a mine have?
Yeah, so the average reserve life right now of our assets on a net asset value weighted basis would be something between probably 15 and 20 years. We expect that to expand. So, it's a very, very long life cash flow typically from the assets that we're looking at and what we have in the portfolio.
And Brian Hansen wants to know, what sort of collateral do you have? Are you refused? Is there a royalty payment you are owed? Can you explain that?
Yeah, so the great thing about royalties, especially when you're in the jurisdictions like Australia, where most of our exposure is, in the US and Canada, case law is pretty consistent. The precedents around paying royalties and essentially a first lien on these assets, is quite robust. And so in the past, we had disputes, but those were solved in our favor. But royalties typically are, it's the first money paid. It's the case law and the precedents around it, and the fact that it typically runs with the land means that we're in very good position from a structural perspective around the royalties. So hopefully that answers that question.
It does. This is a fascinating industry you're in, and congratulations on all these wonderful advancements you've made in your company. So Kyle, thank you for joining us, and please come back in the future with some more updates.
And it will be my pleasure. Thanks so much for having us again.
All right. Be well. Okay, everyone, stay with us as we transition to the next presenter. We'll be right back.